All right, bro. Listen, I'm not gonna lie. Here it's 11:05, and I'm mad because first of all, this should be my bedtime. But like, dude, I just went through like 30 minutes of talking essentially to myself, and I mean, I guess I'm always really talking to myself, but it's like it was all for nothing because I wasn't even recording, and I thought I was. So, anyways, here we are again. Just gonna really quickly blast through this based on everything I just sat there rambling and explaining. Okay, so listen, here we are. First, we're gonna start on our institutional time frame. All right, and so institutionally, here's the levels that I've mapped out. You can see they're marked very clearly, untest low, etc. All right, the idea here is still that we're trading to this order block. I marked the halfway point of the monthly order block, and between that is equilibrium. We're currently seeing price respect equilibrium. Now we'll look for breakers and mitigation blocks here. I do have those outlined already. And is it the same for ES? Let's go ahead and look. ES, same thing. Now for ES, we are actually below the monthly order block. Now we have currently traded to that previously, so or we trade to the halfway point. So we'll see if at least for the S&P, if it will show weakness here and continue lower. We don't know. And again, one of the things I mentioned in my previous video is that like I've been picking highs, which just isn't really good. Okay. It's the same thing here. Okay, so we're ultimately expecting price to at least trade to these relative equal highs. So therefore, as for NQ, I'm going to see what price wants to do on that. Just since we have traded to that point. For ES, we may see price trade a little higher. Not completely sure, but I would be waiting for an indication for price to go lower on both of these. Okay. So that in mind, that's our monthly and weekly bias out of the way. Okay, ultimately waiting for a signal that price wants to go lower, or waiting for uh, to want to see price go lower. Okay, just making sure that's recording now. All right. Now also, I started doing some analysis here on the U.S. dollar. We're gonna keep this really simple, but let's look at where the U.S. dollar is here on a weekly chart. Okay, so we have these relative equal lows here, and this is also consolidation. So we trade below those relative equal lows, and then we see large money or institutions want to drive price back up. Why is it driving price back up? Well, it's driving price to not only take out these highs, but also because we have this liquidity void here. Now we've only rebalanced about half of it. We currently see price as far as on the US dollar index, okay? We have this order block here, and we are seeing price gravitate towards that. But again, with large money being behind this, this is ultimately the draw on liquidity, and prices now engineered these relative equal highs. We also know that large funds are going to want to accumulate positions below an old low, which we see here. Just bear in mind the last 2 weeks of candles, they are obviously more stretched out, but that's what we're seeing right now as we are below those relative equal lows. All right, so the idea here for the US dollar is that we are currently retracing, which makes sense because on our futures we're seeing higher prices. So for here, rightfully so, would be seeing lower prices, right? But let's go ahead and look at the bond market and see what those are doing, since those should be oppositional to the US dollar. All right, so here we are. We're actually on the daily chart here, and we're gonna let me just start actually from our higher time frame objectives and what I'm looking at. All right, so I marked an untested high. I marked an untested low. This is obviously very aggressive price action. So we would be, for every black candle, there should be a blue candle. Okay, we'd be expecting price to rebalance that. Therefore, okay, we would be expecting price to go higher. We also have a swing low formation here in the form of this low, higher low to the left, and two higher lows to the right. All right, so with that being said, we are going to currently see price at least rebalance this range. Now to pass this, these would act as support in this range. So we would need, a great deal of liquidity to see price move up here. So we want to see institutional sponsorship if we're going to see it continue past that range. But ultimately, we have to keep in mind where the market came from. We came from a consolidation, went to an expansion. From an expansion, we're not going to see from an expansion, we're going to see a consolidation. Again, we're going to see a reversal, or we're going to see a retracement. Now, what do we know about, a reversal? So a reversal would be for like a liquidity pool. Liquidity pools and reversals go hand in hand. For a retracement, it's a liquidity void. And so in this aggressive run down here, firstly, we have to understand the fact that This rally up took this level of buy side and actually trapped buyers in the market. Completely trades below that. But now we have this really aggressive price range. So we would be expecting price to rebalance that range since it was very inefficiently traded. And so to simplify what I'm explaining overall, we are going to be seeing higher prices, on the 10-year, 30-year, and 5-year, because obviously it's the same thing for these. They move alike. So with the idea that we're expecting the US dollar index to trade currently to this imbalance or inefficiency, we are of course above these highs, but it's the same idea. From a consolidation, which is what we're seeing here, you're only going to see a expansion. So we may see price return to this order block before continuing higher, but it's the same, concept. I mean, for ES, which is that, we have that void higher before we continue lower. And we have those order blocks higher before we continue lower. So same idea here. Hopefully that makes sense. All right, and now we're going to get off that, and I'm not going to be dead horse. I'm just going to go back to our higher time frames and start doing the analysis there. We are still recording. Thankfully, fuck, that sucks so much, bro. Swear to God. All right, so anyways, now that we are on the higher time frame chart, higher time frame is my daily. It's the four hour. That's what I use, and then I use my monthly as the institutional chart. Anyways. So, what did I frame here on the monthly? Well, firstly, it's just a lot of the same ideas as yesterday, okay? We have this untested high here, but we're also in that order block, and so, we're seeing price actually respect that and continue lower, creating the same high it did back here when it traded into this order block with this consolidation. So we'll see if price wants to show a reaction, but here on the lower time frame, we are seeing indication that we would see lower prices as we have reached a previous level of an institutional reference point. Sorry. All right, so let's see for ES. For the ES daily range, it's a little bit different. We do currently have this liquidity void up here, which again, as I mentioned in my previous video, that's where I'm expecting price to draw to. But we also have this level of untested buy side. Now, that being said, okay, we did also trade. So this is about the halfway point. So this would be consolidation. This is the last up close before that move. We trade to about the half point, and we did close lower. Okay, so it also seems that price is respecting that. And we have to keep in mind, it's the same thing that I just mentioned. It takes a lot of money from large funds to move price from here to here. Okay, this was currently also creating like these relatively low. So we just have massive amounts of liquidity there. We also did trade above these highs as well. Looks like we're trading to that order block in that as well. So can we expect a lower price on Q and ES? Absolutely. Now we'll go to a lower time frame and of course frame those ideas. Here we are on the 4 hour. All right. Again, this was CPI, so it's very probable that we see price rebalance that range. Now, for now, this is not enough indication to sell. All right. Is this enough indication to sell? No, it's not. Okay. This we do see, run below an old low. I'd want some more energy, and then I would want to see price actually, trade back to the low that gets taken before we go lower. And that's just what I'm learning with breaker blocks and mitigation blocks. But, I'm just using some of those ideas here. Okay. Very, very same thing here for ES. We're trading into that void as well here on a lower time frame. Okay, so trading the void. Here's about halfway mark. Okay, spiked up a little bit above it, but now we're seeing price start to trade towards that void. This is all going to make more sense here in a minute when I refine it. Let's look at the weekly range. We consolidate at the beginning of the range, aggressive movement to the upside. With that aggressive movement, okay, this is one-sided. It's not efficiently traded. Now we consolidate here. So our first objective would be the order block before that large expansion move and that consolidation for the weekly range. All right, we'll see what price wants to do in terms of that. If it wants to trade lower or if it wants to trade from here, okay, then we would also have this level of liquidity. All right, for NQ, same exact idea. Okay, so now here's the last one. Oh, and here I marked the target as well. Lower time frame. So here's where I started really starting to refine mitigation and order blocks, and I feel like I've really picked up on my understanding of that. So I'm just going to explain what I marked out here with these gold lines. All right, so here we are on a higher time frame. We're at a previous level of institution or a previous institutional reference point. Now here it seems a little noisy, so I'm going to switch to the 30-minute. What are we seeing here? Well, we're seeing price trade above this high and then create a low. What we see from that low, and we'll use the bodies. Well, these are the bodies on the 15 minutes, sorry. But anyways, we have that low form, aggressive movement below it. Okay, and so from this low here to this most recent high, we would expect price to trade back to it, which it does here with these two up close candles. It creates a new low. We see aggressive movement below that low. Okay, and then so from this low to this high, now expect price to trade back into it. Does it? Yes. All right, same idea here. So we have this low, aggressive movement below it. Now, have we seen price trade up to that? Not exactly yet. But ultimately, from here to here, okay, this is balanced efficiently. Okay, it's just the actual wicks itself. But if we look, right, we can see it has been rebalanced properly. Okay, well, actually, we'll see about that. I'm not going to big lows or anything, as I mentioned, but I'm pairing this with the CPI from Tuesday and the idea that we're expecting lower prices. So same thing. We have this low, displacement below it, and here's what I'm going to be expecting tomorrow is price to trade within that range before continuing lower, and I'm expecting the very same thing for ES. Same idea of price trading to that range and then continuing lower if that's what it wants to do. The idea here is we're seeing short-term rallies, so buyers get trapped in thinking that price is going to continue higher, then it breaks down, and then so smart money, who's here long pushing price up, okay, they're now in a negative. So price retrades within that range or mitigation block to allow smart money entities an opportunity to build in new short positions on the other side of the market, as well as mitigate their losses from the levels of buying here. So I feel like that's been pretty clear. I'm really sad that I didn't get to go through like the whole thing I was before, but this will suffice for now. And yeah, I'm gonna leave it at that. And tomorrow I'm gonna get on a new video or two since I finally feel like my understanding on mitigation blocks and breaker blocks has been deepened from Monday when I originally studied it and was just yeah, just super frustrated dealing with a lot of stuff. But anyways, we'll leave it at that and have a good night.